All right. Hello, we are going to look at 4.2, working together. This is creating a departmental margin statement for each of the departments in your business. If we take a look at the adjusted trial balance, the worksheet for an example in our book, we have extra columns over here to the right of the adjustment specifically for the departmental statements. We also have the income statement and the balance sheet. And then if we slide down to this section on the worksheet, this right here is our departmental section. Okay, so when we started extending balances for anything that had to do with the departments, grills, or furniture, we extended them to the departmental sections and not all the way to the income statement. Now these items down here are not connected directly to a specific department, and so they did come straight over to the income statement. So we're going to create a margin statement for each of the departments, basically using this information, and then we'll create an income statement summarizing this information and adding this information as well. Okay, so what we'll need are the working together papers for 4.2, which is the departmental margin statement for kitchen and for bath. You will also need your adjusted trial balance for Foley Interiors from 4.1. That's a front and a back. Okay, you should have completed that. And you will also need your ledgers for 4.1 to get all the information that we need to fill out this margin statement. Okay. A very good example is page 109. The format of these is not something I necessarily want you to memorize, okay, as to what goes in what column. So I definitely want you to just basically reference the book page for that. I will tell you that this last column, basically if you think about the formula that we use to find departmental margin, those numbers are what could end up in the last column. Before that, it doesn't really matter. It's more of the person creating the statement or the business and what they require. So let's go ahead and just look at our formula. We will need to know net sales or net revenue minus the cost of the goods sold. Now remember, on your papers it'll usually say cost of merchandise sold, but so we can abbreviate COGS, we like to use cost of goods sold. So all of our sales minus the cost of the product we sold is going to give us our gross profit. Okay, and then the gross profit minus the expenses, and really these are the direct expenses just related to this department, gives us our departmental margin, which is really like the net income. Okay, this would really be the same formula to find net income as well. Okay, and again, this is departmental, and it's specifically for kitchen. So when we go to our adjusted trial balance, we need to make sure we're pulling the numbers just for the kitchen. So anything that relates to this formula, those numbers will be in this last column right here. Okay. All right, so then we just need to go start pulling our numbers. We have some main sections. Our operating revenue, which will be basically our net sales, our cost of merchandise sold, which is basically our cost of goods sold, our gross profit, again, part of that formula, our total expenses, or our direct expenses, we'll mark it here, okay, our expenses, and then the departmental margin. Okay, there's our formula. All right, so start pulling the numbers. Of course, these are headings. You've got the colon. Sales is what we're looking for. So going to, and remember this is just for kitchen. So we need to go to our adjusted trial balance and pull the number for sales for the kitchen. 417-95307. Okay? And we are going to put that in this column. 417-95307. Okay? Then, and this is nice that they lay all this out for you, okay? Then we had sales, but we also gave some people some discounts, and we also had some returns and allowances, maybe for broken product or something like that. And so that affects the sales. Remember, we record these separately. We journalize them separately. So those are separate accounts that we have to consider. So this is, of course, is a less. We're going to move back one column. And again, these numbers are coming off of your adjusted trial balance. All right, so 665527. And 763477. Okay, and we can add these up. We don't really have another line to total that, so we'll total it up beside that. Those two together is 14,290,04. Okay, so now we have sales less our discounts and returns and allowances, so subtract those two. Okay, and this is the net sales, so this is part of our formula, so it's going to go ahead and come over here. So 403,66303. Okay, so there's our net sales. Next section, cost of merchandise sold. So merchandise inventory doesn't really change over the year. We have a beginning inventory, and then at some point, usually at the end of the year or at the end of our fiscal period, we're going to go out there, we're going to physically count our merchandise again, and that's our ending inventory. Okay. Throughout the year, we've made purchases of more inventory, and that's been tracked in the purchases account. And then, of course, we had discounts and returns and allowances as well. So we may have gotten a discount because we paid early. We may have made some returns because the product was broken or not working or something like that. So all that is taken into consideration to find the total cost of merchandise or total cost of goods for sale, so COGS. All right, so this is also, I'm just going to put, this is COGS. Oh, sorry. No. That's gas. That's goods available for sale. This is COGS. You may see me write that as well. Goods available for sale, cost of goods sold. Okay, so merchandise inventory January 1st. Basically, that's been sitting in our ledger this whole time. So if we go to our ledger and look what the balance was before we made the adjustment, okay, 140,890. Like I said, that's really pretty much been sitting there since January 1st. Okay. All right, so right here, 140,890. Purchases. Back to our worksheet. Yeah, and we can't pull this one because that's the ending. This is the adjusted trial balance. If we could see the first trial balance, we could pull that number from there, but we don't have it, so that's why we went to the ledgers. But here we have the purchases for the whole year. So So 204,16491. Right, and then of course we have discounts and returns and allowances. Again, pulling that from the adjusted trial balance. 2505. Yeah, 2505. 71. And returns and allowances 4,92552. Add those up. We'll just move that total over. So that's 743123. Okay, and if you need to start making you some little notes in there so you know where those numbers are coming from, this plus this equals this. Okay, this plus this equals this. Okay, write those in there if you need to, so you know what you're adding and you're subtracting. Okay. All right. So net purchases. Our purchases minus our discounts and returns and allowances. 196,733,68. Okay, so our beginning inventory plus all of our purchase gives us our goods available for sale. We had this much inventory sitting there, we bought this much, this is what we had available to us to sell to our customers throughout the whole year. So adding those up, 337, 623, 68. Okay, less your merchandise inventory on December 31st. Okay, so this is our adjusted trial balance, or you can go to your ledger. Okay, we made that adjustment, so 147,08462. You can also see it here. Here it is. 147,08462. And again, notice the word less, so we would be subtracting that, right? To get our cost of merchandise sold, or COGS. 190,539,06. Okay, so this minus this equals this. All right, and there's our goods available for, our cost of goods sold. Okay, so our net sales, cost of goods sold. Now subtracting those two will give us our gross profit, and that will be 213, 123,97. And there's your gross profit. Right? Next section, oh, I hope you saw that. 213,123,97 is the gross profit. Okay, next section is direct expenses. So these are only going to be expenses that relate to kitchen. Okay, so those will come from your adjusted trial balance. Okay, we have advertising, payroll, and salary. So if you look here, here's advertising, payroll, and salary. These are specific to kitchen. There's going to be other expenses. Okay, these are called direct because they're directly affecting the departments. These are indirect. These are for the whole company. It doesn't matter what department it is. You're going to have insurance, you're going to have rent, you're going to have supplies, you're going to have electricity bills. Okay, so those don't relate directly to the department. So these are the only ones we're going to add in for this. So advertising, payroll, and salary. Again, pulling those off of that adjusted trial balance. All right, so 11,900. We'll go to this column. And then payroll taxes, 5193 and 25 cents. And then salary expense, 5912195. Okay, so we'll add those up. We have a separate line for total direct expenses, so we'll move down a line to write this total. 76215 20. Okay, and this gives us our expenses, and so now that gives us everything in our formula that we need. Okay, so we have our gross margin minus our expenses. That leaves us with a departmental margin of 136,908.77, and we'll double roll across all of that. Okay, and again, that's almost just like net income, but because we're breaking it down to departments, we're going to call it margin instead of net income. Okay, then they want you to do the vertical analysis. Okay, that's what this is called, vertical analysis ratio. Okay, and this is basically the item divided by the sales, or the total. Okay, this is a percent of net sales. All right, so 190,539 divided by 403,66303. It's going to give you a decimal. You'll make it a percentage. Do the math, and you should get 47.2. Same thing here, the 213,123 divided by 403,663. You always want to do this to one decimal. Okay, our direct expenses as a percentage of net sales, 18.9, dividing 76,215 divided by 403. And the last one, departmental margin, 33.9, dividing 136,908 divided by 403,663. This is the percent of net sales. Okay, and of course this one will be 100.0 because that's sales divided by sales. Alright, so that takes care of the departmental margin for kitchen. The working together also includes that for bath. So this would be a good practice for you to go through. Make sure you know where all those numbers are coming from. Make yourself some good notes. Draw yourself some arrows, put some pluses and minuses and equal signs in there to make sure that you've got yourself a good notes page. And remember that knowing what column everything goes in, not super important, but if you want to go ahead and follow the samples in the book, that definitely helps me with grading. Again, the last column usually basically contains the numbers that match with the formula, if there's a formula that we're working with on that statement. Okay. Alright, ask questions if you need to. And I think you're good to go.